साथ।
The Nifty flitting between red and green. What's looking good is the mid-cap index, which is up almost about 75 points right now.
The Nifty is up 0.5%, but the mid-cap index is up 1.7%.
So down around 100 odd points.
The latest bout of selling pressure has taken the Nifty to that 17,600 mark, almost there. Though in the last 30 minutes, things have stabilized.
We have closed below yesterday's low. In fact, we've closed at the lowest level of the day, 17,580.81.
Hello and welcome to CNBC TV 18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in just 5 headlines. I'm Ekta Batra. Here are the top stories for the evening. Weak global cues dent Dalal Street as stock markets wipe out early gains to end in the red. Sensex loses over 500 points. Nifty loses over 150 points. It's a mixed day for Adani Group as its promoter creates additional pledges in some of the group companies. 4 of the group stock hits upper circuit while the other stocks closed with cuts. The group adds 4,500 crores to market capitalization today, but the total value is still 52% lower to levels seen before the Hindenburg report. A big capex boost powers Max Healthcare 3% higher. CMD Abhay Soy tells CNBC TV 18 that the company will undertake a 4,500 crore capex to add 2,800 beds over the next 4 years. The capex will be funded via internal accrual. Sequent Scientific rallies after calling off the acquisition of Denata Pharma. Meanwhile, Data Pattern gains 3% after launching a QIP to raise funds. Sources tell CNBC TV 18 that the company plans to raise 450 crores with an upsize option of 500 crores. A persistently hawkish tone from the US Fed keeps crude prices 5% lower for the week despite an unexpected decline in US crude inventories. A stronger dollar also weighs on prices. All right, well, those were the top stories. Let's also tell you what we have lined up on the show for you. In Market Opinion, we have Manishi Raychaudhuri of BNP Paribas, and in a corporate voice on the show, we have Abhay Soy, CMD, Max Healthcare. All right, well, first, here's a look at the day's trading action. Weak global cues dented sentiment on Dalal Street. The markets failed to hold opening gains and ended at the day's low. The Nifty and the Sensex lost close to 1% odd. The Sensex fell over 500 points while the Nifty fell 160 points. Broader markets fared slightly better than the blue chips. BSE companies erased a market capitalization of close to 2 lakh crores. Surbhi Upadhyay is here with the day's trading action.
Well, not a good day if you're a bull in this market at all, because the bears really made a very strong comeback today. And it happened in a span of 24 hours. The market today undid a lot of the heavy lifting, the painful work that it was putting together over the last 2 to 3 sessions, particularly yesterday. So what's the problem? Well, not only did we close at the lowest point of the day today with this 1% drop, the Nifty couldn't really hold on to yesterday's lows, Wednesday's lows. And we finally ended below the 17,600 level. There was a lot of momentum on the downside, and that was evident in the quality of stocks, the nature of stocks. I mean, a lot of large, heavyweight blue chips led this move down, and that includes names like Reliance Industries and ICICI Bank, TCS. So this was not a sporadic move structured by 2 or 3 smaller names, but the heavyweights were facing a lot of pressure today. Auto stocks were under pressure as well. Quite a few of the big ones like Mahindra and Mahindra, Tata Motors, Maruti, many of these names down between 2 to 3%. Mid-caps did relatively better, but even towards the end of the session, the advance decline ratio was favoring the declines, more declining stocks than advancing stocks. So again, it tells you that today's pressure was fairly broad-based and not something that you can ignore very, very lightly. There was some bottom fishing, but it was restricted mostly to some of the metal stocks, specifically the steel names. For instance, SAIL or a Tata Steel. That's why we saw some green pops. Of course, there were individual names on the mid-cap side, a lot of stocks moving around because of big block trades like a Gokuldas Exports. But that was all news-based. If I go back to talking about the market's mood, well, caution seems to have certainly returned. And that's because of the reality check that Friday you're getting into a very big event, which is the US non-farm payroll data. Remember, it was that event, the January report, that literally set the cat among the pigeons. And we really need to see what the Feb number will look like and then how will those interest rate projections in the US move. For now, markets in India and around the world have gone back to watching the yields in the US as well as the dollar index, both of which remain elevated.
Okay, all right, Surbhi, thanks very much for that. But let's get in some market opinion. Manishi Raychaudhuri of BNP Paribas says one should avoid leveraged companies as they are vulnerable He also says he is no longer cautious on IT service companies.
Cash generators and companies that have net cash on their balance sheets, we try to avoid leverage as far as possible. When we have a steadily rising interest rate environment, leveraged companies are kind of vulnerable in that environment. Second, we would also rather play value in preference to growth. Now, that particular angle, that particular consideration set is difficult to find in India. It's much easier to find in North Asia, in Korea and China. We were till recently quite cautious on the IT service companies, but in our most recent rebalancing of the Asian model portfolio, we have actually added to Indian IT service. This was about 3 weeks ago. And we think that, the kind of deals that are coming through for the top-rung frontline companies should protect their revenues even in this uncertain environment.
Okay, well, let's move on to the second headline now. 4 out of the 10 Adani Group stocks ended the day in the red, with the group gaining a market capitalization of over 2,000 crores today. The group stock's current market capitalization stands at 9.2 lakh crore rupees. Meanwhile, the promoters created additional pledges in some of the group companies. Adani Transmission saw an increase of 0.76% in promoter pledges, while Adani Green saw promoter pledge rise by nearly 1%. Vivek Iyer is standing by with the further details.
Well, an important update coming in as far as 2 of the Adani Group stocks are concerned. Adani Transmission as well as Adani Green were in focus. So yesterday, post-market hours, there was a notification to the exchanges where the promoter has said that they've gone ahead and created an additional pledge of around 0.76% equity. This is in favor of SBI Cap Trustee. Now, the total promoter pledge in favor of SBI Caps at this point of time stands at 1.32% in Adani Transmission. Coming to Adani Green, the total promoter pledge in favor of SBI Caps is 2%, indicating that there has been an additional 1% pledge that has been created in favor of the trustee SBI Caps. So, now remember, February 8, 2023, the Adani Group had actually pledged additional shares in favor of the SBI Cap trustee. And remember, 1.6 crore shares was the total amount of shares that was actually pledged with the SBI Caps. Now, when you're talking about what exactly is the meaning of this, SBI chairman had, in interaction to CNBC TV 18, had mentioned quite clearly that the Adani's promoters' additional share pledge was basically to top up collateral for existing loans, and the additional shares were not for a new loan or new pledges of the shares. In fact, on February 13th, there was a slight release in terms of pledges. There was almost a 0.1% equity that was released in Adani Green. Now, despite that, the overall group continues to remain in focus, especially when it comes to promoter pledging activity and share-back financing.
Okay, all right, Vivek, thanks very much for that. Well, let's move on to the third headline today. A big capex boost powered Max Healthcare 3% higher. Speaking to CNBC TV 18, the CMD, Abhay Soy, said that the company will undertake a 4,500 crore capex to add 2,800 beds over the next 4 years. He also added that the capex will be funded via internal accruals.
We are going to be incurring a capital expenditure of close to 4,500 crores over the next 4 years. We have a base of 3,400 beds. And just to clarify, we are adding another 2,800 beds in the next 4 years. We are funding this entirely through internal accruals. Even at present, we are a debt-free balance sheet, and we continue to add about 250 to 300 crores of free cash flows to our bank balance every quarter, in fact. Our ARPOBs are significantly higher already due to our clinical mix. 35% of our beds are critical care beds. That essentially signifies that we do a lot of high-end tertiary care work. We're able to do that because majority of our assets, 85% of our assets are in the metros. 30% of our beds are catering to institutional business. So going forward, you're going to see some distillation as well of the payer mix, which should be a key lever as far as ARPOB is concerned.
All right, time for a break now, but stay tuned. We'll be back in a jiffy with all of the other top stories.